Started with $1 in a dream. This one for all the people that said I couldn't do it. You know the best feeling in the world?
Speaking to you is Liso Mutupi, and thank you so much for making it up to this lesson. Currently, we're on lesson 9, and we'll be speaking about the Fibonacci retracement. And the topics that we're going to cover are the introduction to Fibonacci, the Fibonacci levels, the key percentage, why and what are retracements, going long, going short, and the target area. Let us take a look at the first topic, which is the introduction to Fibonacci. The Fibonacci golden rule is based on certain mathematical relationship expressed in ratios between the numbers in a series. The discovery was popularized in the Western world by the 13th century mathematician Leonardo Fibonacci. They have application in the fields as biology, music, art, and architecture. Fibonacci works in any market. Fibonacci trading involves when and where the market reverses in the order for it to keep on moving. Fibonacci levels act as support and resistance. When price goes up, they act as resistance, and when price goes down, they act as support. When Fibonacci resistance is broken, it can act as support, meaning that if the Fibonacci resistance is broken, it can become support. And if the Fibonacci support is broken, it can become resistance. Support turning into resistance. Okay. Now let's take a look at the Fibonacci levels. We've got the 0%, the 0%, the 14.6%, the 23.6%, the 38.2%, 50%, 61.8%, 78.6%, and the 100%. Now we're going to look at what these levels are and how we can utilize them to capitalize on our profits. Okay, the key percentages. Traders need to know that there are key percentages, the key percentage which trends tend to retrace before continuing in the original direction. When retracement begins, traders can make these percentage levels as a percentage of trend distance and anticipate possible reversal at these key levels, which can act as support or resistance. Most important levels: 38.2, 61.8, and 78.6. Meaning that these key percentage areas is if it's in an uptrend, and currently we're seeing that the bullish trend is starting to exhaust, meaning that it's taking a breath. It's slowly retracing downwards. We can start targeting these levels. And the most important levels, as they say here, it's the 38.2, the 61.8, and the 78.6, meaning that when it gets to the 38.2 level, we're going to start looking if it's giving us a confirmation that it's going to continue going upwards to continue the trend. Or we'll look at it when it gets to the 71.8 or when it gets to the 78.6. These are the important levels that we need to monitor when price gets there. Where and what are retracement? I made a mistake there. Sorry about it. What and where are retracements? Retracement levels alert traders or investors of a potential trend continuation. They are calculated by first locating the high and low of the chart. Meaning that price came here, you can see it came from the low, it went up, it created a high, came back down, it created a higher low, and then it continued to go up, continued the leg, meaning that created another higher high. So now with that, we're targeting where our higher low is going to be based using the Fibonacci ratio. And in this manner, we can see that our A, B, C, it came back down at the 38.2 level. Okay. And the same scenario, it came from the low, it went up, it's our high, retraced. This is a retracement. It's an impulse, correction, impulse, impulse, correction, impulse, meaning that it impulsed upwards, it retraced, corrected downwards at the level 61.8, and then it continued to impulse upwards. Same thing can be seen here. Impulse upwards, retraced or corrected downwards to the 78.6 key level, and then it continued to shoot upwards, impulse upwards. So basically, this is our these levels show us where possibly price can go back up. because we know that during this interval, during this correction, with the strategy, we'll be staring at what price pattern is giving us. We'll be staring at the price pattern. Okay. So now it states here, after price makes a move to the upside A, it will retrace a part of that move B before moving on again in the desired direction C. These retracements are what you as a swing trader want to be involved in a long or short position, meaning that you're able to see that price is moving upwards. When it got somewhere around the retracement area, the key level 38.2, the 61.8, or the 78.6, that's when you start to look to take advantage of the swing point, meaning that if it's in an uptrend, that's when you're gonna start buying here. You're gonna go long here, or you're gonna go long here or there. If it's in a short trend, if it's in a downward trend, you're gonna short at these levels. Okay, let's look at the next topic. Okay, before we move on to the next topic, here's an important notice. Keep in mind that these retracement levels are not solid reversal points. Instead, they serve as alert zones for potential reversal. It is at this point that traders should employ other aspects of technical to identify and confirm a reversal. Meaning that we should keep in mind that these retracement levels, like when it gets to the 38.2 level, we don't just buy when it gets there. It should confirm with us that we're starting to go up. That's when we'll do what? We'll start looking at our candlestick confirmations, such as your thing, your star. We'll stare at the star if it's printed. We'll stare at whatever confirmation that is giving us, because you might find out that it printed a pattern that shows that we're going to the upside. So we take advantage of all of those confirmations. That's what it actually means. Yeah, so now let's continue on the next one. Going long. Okay. Going long, you do know to spot an uptrend, you need higher highs and higher lows. So now price came from somewhere around here. It moved up, it created a high, came back down, retraced somewhere around here. It created a a higher low. It shot up and it created a high. So basically, we could have took our Fibonacci, put it down here at the low, because you can see it says direct from swing low to swing high, from the higher low to the higher high, meaning that this could have possibly been a higher low at the previous year, could have been a high and then a low. So we could easily drag our Fibonacci somewhere around here, drag it from here up until here, and then this point here would have been a key percentage. So now what we've done is that we don't have the points before this, we only have this point here. So we're taking this higher low, and then price created a higher high somewhere around here. So now price is moving somewhere downwards. It's moving downwards. What we're trying to do is we're seeking for a potential reversal whereby it's going to continue going, because we know it's an uptrend. It has to go up. It has to go up. But now it's doing what? It's retracing, and the retracement is doing what? It's going downwards. So we take our Fibonacci from this level here, we drag it from here, we put it down. I'll show you how to do all of that. But then we drag it from here, and then we drag it to the top side, from the higher low to the higher high. And then all these levels are going to come up. These levels are going to come up. You can see here will be 100, and here will be 0%, 100% and 0%, meaning that if price happens to come back down to here, it made 100% retracement, and it shows that we can possibly experience a change in trend. So now, once price never came to this point here, once price never came to the 100%, it never broke the low, so we're still in an uptrend. So basically, we're gonna look at the 38.2 level. We're gonna be staring at the 38.2 level on how price gets here. If it gets here and then it prints as a confirmation that we're going to the upside, we're gonna take advantage of that. But if it doesn't do that and it gets to the 50%, we're gonna also take a look at it and then look for confirmations on when price is gonna go to the upside. If there's no if there's no confirmations that price is gonna go to the upside, we're gonna look at the next level, 61.8. And if the 61.8 happens to give us confirmation, like your candlestick patterns that are going to the upside, we're gonna take advantage of that. We're gonna start going long somewhere around there, and then price is gonna continue to go to the upside. That's how we utilize that's how we utilize this Fibonacci tool. Okay, we're gonna look at how it works in the short trade, and then we're gonna take a look at the real-time market. So it's not, you'll see that it's not really complicated. Okay, the market moves in three phases: impulse, correction phase, and impulse phase. Whenever we are in corrective phase, that's when we should take a look at the Fibonacci retracement. Okay, we do know that it moves impulse, correction, meaning that the impulsive move, we don't utilize Fibonacci, but then once it starts to correct, that's when we take out our tool, put it at our previous swing point, our low and our high, then we see when it's gonna continue to impulse. Okay, let's take a look at the next one, which is the going low, going short. Going short. Okay, you can see here, the market is forming lower lows and lower highs. Here's your lower low, your lower high, your lower low. So now what we do is that we drag from the swing high to the low, meaning that here's our lower high and here's our lower low. Okay, pause. We can drag here. Here's our lower high. You can see this as a high, and then this is our low. Okay, so we can drag from here, put it down here, and then this point would be a reversal point. It will be a level. It reversed at a level. So now it done the same thing. It shot all the way, impulsed all the way down. We take from the higher, the lower higher, to our recent lower low. You must use the recent one. You mustn't use the previous three how can I say, three lower highs before. You mustn't use those ones. Just use the recent ones. If there's a recent lower high and a lower low, take them, the lower low and then the lower high. Price is busy in a corrective phase, and check it out and check out what it's giving us. When it gets to the 38.2, check whether it's giving us any confirmation that we're going downwards. If there's no confirmation, when it gets to the 50, check whatever, if there's an inverse shooting star, or maybe it's printing something like a flag going somewhere there. And if it breaks it at the 50 percentage level, we know that possibly we're going to continue with the impulsive move. And if it gets to the 61.8, monitor it and see what price is formed when it gets there. Same thing with the 78.6. These are your key levels. These are your key percentage levels. We need to take advantage of them. Okay. Now let's look at I believe we took notes on that, and now we're going to look at the real-time market and how we can utilize this Fibonacci tool. Okay, currently we are at the MetaTrader platform. I just want to show you guys where you're gonna get it, and how you can just I'm gonna show you guys a quick example, just a quick one. Then we're gonna over to the trading view platform, because yeah. Okay, you've got it here. Fibonacci, draw Fibonacci retracement, press on it, and then with the going short one there, the one that's creating your higher lows and your higher high. I mean, you're not your higher lows. I mean, your lower lows and your lower lows, your lower highs. Okay? As you can see here, your lower high, 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 your lower lows. Can you see that? So what happens is that you take Fibonacci here. Yeah, and you can see here's your previous point. Then you drag it all the way down to your low. Okay? Something like this here. Okay, let me do this. Put it exactly by the week where price came about. That. Okay, you can see here, this 100, your 100 percentage level, your 0.0, your 0% level. Okay? See where price came, and then it retraced by the 38.2 key level, meaning that when price was still going up somewhere around here, when it was still going up, you can target already. You can do something like this here. Okay, do something like this here. Draw your shapes and say, okay, this one we never said that it's an important level, so you shouldn't take it too head. But see what we're talking about here. We said that resistance can often become into support, because see what happened. It was resistance here. It got treated as your support. Can you see this? So yeah, you could have done something like this here. Okay, put your line on the 38.2. Ne? And then do the same thing at the 61 point. You must put at the levels that you said are a bit more important than the other levels. And then your 78.6. Get it like this. meaning that you do know that if price happens to go past here, it's gonna have to come here. Ne? If price happen to go past this one here, it will have to come here. And then from here we're expecting a retracement, or from here we're expecting a retracement to the downside, or from here we're expecting a retracement to the downside. Can you see that? Now price came to the 38.2 level, it respected it, and then it went all the way down. Okay, let me do this. But now when it gets here, we need to check on what patterns are being given. Like you can see here, we've got the inverse stars. And if we move on to the bigger time frame, let me do this here. You can see something like, for us to be involved in a long trade here, you can see that it gave us an engulfing candlestick. I mean a short trade, not a long one. You can see that it gave us a engulfing candlestick. This candle here, it's engulfing. It shows that the sellers are taking over. So basically this can be our point. We've got a confirmation that we're going downwards. So then you enter your Euro US dollar downwards trade. Okay, let's move on to the trading view platform where we can see on how we can capitalize from this. And please do not complicate your charts, because just it's the same way that I drew it. Like you shouldn't try to complicate it and draw it anyhow. Can you see this? You know that you've got your points. You know that this is a level here, this is a level here, this is a level here. It has to respect it. It has to definitely respect it. Okay, Jesus. Now let's look at the GBP CAD, and I just want to show you guys how the going long Fibonacci tool works. Okay, so now at this point they were able to spot a nice upward trend, retrace all the way to here, impulsed up here, retraced here, impulse up here. Now we can see that. Okay, what's happening with it? It impulsed all the way up here, corrected to here, impulse here, corrected here. Here's an impulse. Okay, correction. Okay, impulse, correction, impulse, correction, and an impulse. Okay, and you can see it broke to see that it's a change of trend, is that it broke the lows here. As if you can see the straight line here, it broke it impulsively to show that it's changing the direction. Okay, now let's look at how we utilize the Fibonacci tool. Okay, we go here by the toolbox, and the Fibonacci retracement is like this. Okay, let me just show you. Let the whole list come up, the list of tools, so I can show you how you can get it though. So you get here, you don't get confused, or you can even see the image of it. You can even see the image of it. Okay, but then here is the Fibonacci retracement tool. You can put a star at it to make it come up here, because my one is on shortcuts. I don't have to go all the way up in here to get it. Yeah. Okay. We said that when we're going low, when we're going long, we do what? We take it from the low to the high. Something like that. Ne? And then at what level? 38.2, 61.8, 17. Actually, at from the level 38.2 to the level 68.6 is what matters most. Ne? So now let's look at this. Where did it get to retrace? It retraced here just at 38.2. Can you see it? Here's the level 38.2. It came all the way down as if it's coming for the 50%, but then it couldn't come for the 50%, then continue to go upwards. Ne? Now let's take a look at the next one. Okay, let's put it here at the low. The 100% should be at the low. Okay, right at the low. And this one here, right there at the high. The low, the high. Ne? See where it came and retraced exactly at the 61.8. At the 61.8 level, can see, because what you do is that price would be somewhere here, and then it comes to correct downwards. As it's moving downwards, you're gonna have this Fibonacci tool. You take it from here to the high, and then you check or how it acts on the levels. So now here you're not gonna be able to get a long opportunity because you see how it got to this level 38.2. It impulsed past it. Yeah? But then when it got here by the 61.8, you can see that when price got here, it started to. Okay, let's zoom in a bit so you can see. Maybe it give this thing. Okay, the drawings are getting messed up too. But yeah, okay, it's nice like it there. Okay, we'll look at it because I believe when at this level here, it gave us more confirmation that we're going to the upside. Okay? Now let's move it a bit up and see this one here. This was a steeper one. What did I do? This one here was a steeper one. Let me move data back at our. Let me move. Okay, what's happening with price now? Okay, sorry about wasting time on this. Just want to put this data here. Okay, something like that. No, it was like this. Okay. Okay. Yes. Yeah, exactly like that. Okay, okay. Yeah, let's not waste time on it. Can see here it came to the 61.8 level. Boom, it went up. Now let's take a look at the next one. Here's our swing low. Here's our swing low right there. And our high right there. We've got our high right there. Okay, like this here. Yeah. See what level it came at? 68.6. I mean 78.6. Came at the level 78.6. Boom, you get your buy entry here. Shot all the way up. Didn't even look back. Shot all the way up. Can you see this? Can you see this here? Yeah. And okay, let me remove this here. Like wherever it prints, it gives us a swing point. We start to look at what pattern is being printed. Now let's take a look at. Okay, let me cancel this one here. Okay, all my drawings. And then let's say at this level here, the 78.6, we've seen that it's at the level, and we're trying to take advantage of the sellers here. How are we gonna capitalize from it? How are we gonna capitalize from it? You can draw your straight line down here. Your straight line somewhere down here. Okay, let me do this. Okay, yeah, there we go. Okay, let me just zoom in a bit so you get a clearer view of how we capitalize on such. Going long on the Fibonacci 2, to going long. Okay, I'm just zooming in here. Okay, this is the 4-hour time frame. 4-hour time frame. Okay, let's see how many pips it actually went up from the 78.6. From the 78.6 one, I see how many pips it went up. Okay, let me use this measure too. Okay, 78.6. Somewhere here. Up until here. Okay, you can see it went 716 pips. 716 pips. Okay. Okay, it's not at the right point at the top side. Okay, somewhere here at the high. You should put it exactly at the weak, right here. Okay, yeah, we got it. So now how are we gonna be able to take a long trade here? We can see that it's at the Fibonacci 78.6. Can draw your pattern. You have a trend line there. We've got a trend line somewhere there. You draw your pattern that shows that once it breaks this pattern here, it's a confirmation that we're going to the upside. Because now you can see that whenever it moves to these key levels, it corrects down to the key levels. So whenever it moves to the 38.2, the 61.8, or the 78.6 level, it corrects downwards. Ne? So now we could have had something like this. Okay. Ne? Having something like this here. I took it from this point here, came all the way to this point, and I know that if it breaks here, it showed me that it's at the 78.6. I'm expecting a reversal here, but a confirmation here is that if you look at the stars, there's no star that gives us a confirmation. But I believe at the 1 hour time frame or something would get a star. But now since we drew this with the 4 hour time frame, we see what pattern. Okay, we draw down. Yeah, it came all the way down. Can possibly have something like this here. Okay, something like this. And this type of pattern is what? It's the rising, it's the falling wedge. The falling wedge, you're gonna learn it at the next chapters. You're gonna learn it, you're gonna learn it at the next chapters. So now let's say we remove the Fibonacci. We saw that it's at the 78.6. This is the last key level where it should retrace. And now we've got a falling wedge somewhere around here. So how can we take advantage of it? Okay, our previous target is the previous high. This previous high is our target, so we can go long somewhere around here. Once it breaks this level here, it breaks it. Okay, can go long as soon as it breaks, as soon as the candle closes above the breakout. Okay, let me just move this up. Put your stop loss right here below the higher low. Below the higher low, somewhere there. Your target all the way up to here. So your risk reward 1:3. So your target 500 pips. You're targeting your 500 pips. And that's how you capitalize from it. Okay, now let's look at the going low, the going short. The going short examples of the Fibonacci tool. Okay, I believe that we're able to see the going long one. And if you've got any questions, please don't mind. Don't even hesitate to contact and ask questions. You've got a mentor specially assigned to you. Go to that mentor and speak with them and be like, hey, I don't know what's happening here. That guy was saying this and this and this. How did it get to do that and that and that? Then he's going to get back to you, definitely. Okay, I'm at the 4 hour time frame, Tony. So let me take advantage of this. Okay. This bigger time frame one. Okay, we can see that price moved somewhere from here. Price has moved from here to down here, ne? All the way up here, impulsed all the way down here, ne? So we can see that another thing that we can see too is that this point where it's at now, it's previous support. Can you see this? It's previous support. So there are chances where it can respect it, ne? But when it's respecting it, it'll definitely have to come back and break it, because it's creating your lower low, your lower high, your lower low. Ne? And let's see what level was this here when Fibonacci happened to retrace. When Fibonacci took place. And with the going short one, we said that you should take it from the high to the low. When you're going short, you should take it from the high to the low. When you're going long, take it from the low to the high. So now in this manner, we're taking it from here all the way down to here. Okay, we take it from there all the way down to there, and then we're gonna see what point it retraced at. Okay, I don't know what's happening. It's becoming so slow, but yeah, okay, we're getting it though. From the 100% to the 0%, and we can see that it gave us a retracement at the somewhere around the 50% Fibonacci level. The 50% Fibonacci level. So meaning that when it got there, once it started getting to your 38.2, you start seeking for your cells. Okay? Once it gets there, you start seeking for your cells. Then it goes to the 50 level, seek for your cells. It confirms that we're going down. Then you take advantage of it. Okay, let me do that. Okay. can see here 50 level, exactly at the 50 level. It even gave us a week and then continued to go down. Let me see how many pips it shot all the way down. From the 50 level, it went. Currently, it's at 917 pips. 917 pips. If you sold it here and still held it on the 4-hour time frame. Okay, now let's look at how you're gonna enter that sell. Oh, but before we move on to that, let me just show you on how you can also capitalize on the next move. You can see this is our previous high. Now it's at the low, and you can see that it's at the support. So basically, we can expect a Fibonacci level somewhere around, put it here at the low, exactly at the low, and here at the high. At the high. There we go. At the high. So basically what can happen is that this point here, check this previous point here. This point right here can be treated as your resistance, this point here. So price can happen to either come and respect this 23.6 level, because the reason we're seeing it, the reason we say that it would possibly come to the 23.6 level is that when you draw your trend line, coming all the way down, it will give us a third touch somewhere around here. Can you see that? Here's your first touch, here's your second touch, and here's your third touch somewhere around here. But you can have something like this too. Okay, let me do this. In this, move this one here at the high here. Okay, and have something like this. Okay, can see that name. I took it from the high, the very high, to the lower high, and then now another a different scenario that we can say too is that if price happens to break that level that we said it should break, the 23.6, price should definitely come to somewhere around the 38.2 here to create the third touch of this one here, because you can see here's the first one, the second one, create either the third touch here, or if it happens that it moves up in an impulsive manner, it should come to the 50% level. Okay? And then from there it will continue to go down and break it. So now when it moves to those levels, it moves in a corrective form. Something like this. Let's say it moves up, down, up, down, down, up, down. Okay, and yeah, 38.2. Then it gives us a pattern here. So when it breaks this pattern here, that's when we take advantage of the short trade. We take advantage and then we go down with it. Okay, let me clear these drawings here so we can see how this one here took place and how we should take advantage of that. Okay. Here's our high, here's our lower low, and here's our lower high. Okay? This level was given as what? As the 50% level. The 50% level. So what we do here is we draw a pattern that shows that when it gets when it breaks this pattern, it's gonna go to the downside. A confirmation of our level. Okay. We draw a confirmation of our level to show that when the Fibonacci 2, when the price gets to the specific Fibonacci 2, it's gonna go all the way down. Right? So we can't just take guesses. We can't just say when it's at the 38.2, I'm selling there, or when it's at the 50%, I'm selling. When it's there, no, you can't do that. You have to confirm first with your trades. Okay, let's take a look at this level here. Let me just do so, make the charts a bit neater. Just a bit neater. The advantage of doing this is you're able to forecast and you're able to read the market from a 3D perspective, meaning that you're able to know the future moves of the market instead of just getting in the market and saying I'm selling or I'm buying. Okay. At the higher, exactly at the week, and then now we're putting it at the low here. I'm trying to show you guys how we could have taken advantage of this move. this one here. Okay, and then as price done there, what you can do is you draw your, let me just zoom in a bit so you can see what price was giving us. Zoom in. Okay, just like that. Done something. Okay, just like that, yeah. We saw that this is the 50 level. You can see here the 50 exactly retraced all the way back here. And check this out, it gave us an engulfing candle right here. Can you see the previous candlestick and then the red one? It was the engulfing one. Man, if that's not enough confirmation for you, let's take a look at this. Okay, you draw your flag there, just like that. Then you can have another one. Okay, let me put it exactly here. Exactly here. Okay, have that on there and have something like this. Okay, you can see there's your flag, parallel lines, a straight flag, a nice one. So you can see what happened here too. It broke out here. It showed you here that we're gonna go down. So if this engulfing candlestick is not enough for you, you can still get another entry at the flag. When it broke the flag, then you go down with it. You continue because you can see. Let's say if you enter here, nice trade. You're capitalizing on these moves here. But then if you enter here, it's a great trade too, because now you're in reduced risk free, meaning that these ones are the high probability trades. You can't with this one's here, it's not very simple whereby your trade is gonna hit stop loss. But with this one here, it can go back up and test again and then hit your stop or take you out and then continue going down. Yeah? You enter here and then you continue going down with it. You capitalize on it, continue to drop. Can you see that? It's a nice flag. It's a nice flag. Yeah? Okay. Yeah, I believe we've got the confirmations. We had the confirmations of how we're gonna take advantage of these. And let me show you another method of how you can instead calculate your using the Fibonacci tool, how you can put your targets, ne? How you can put down your targets using the Fibonacci tool. Okay, let me do something like this. Remember we saw it, yeah, it was this point. You saw this point as your low, your high, and then came back down to your low retracement level. It went back up, ne? So another thing that you can do is this, check here. Because then you took it from here, came all the way to the high, and then you continue with price, gave it the retrace that the 38.2 level, then you went up with it. Ne? So now there's another way where you can take advantage of it. Okay, from here, came here, retraced here, it went up. The other method is that what you can do to calculate your targets is you can take, okay, it's on page. Why is it doing this? Okay, you can take the price from the higher to calculate your targets. Ne? You take from the higher, you bring it back to the low. At the low, ne? Like the opposite thing. You just take from the high to the low. And then here at this level, this 1,68, it's wherever you can put your target, meaning that you'd enter somewhere here at the 38.2 level. Then you go up with it and capture. Let me see how many pips it would be. Your target is here. For our time frame, 1,013 pips. It's great, don't you think? Okay, let's take a look at the other one. Take a look at the other one. We had another scenario. It was something like, how was that one? It was from here, from the low to the high. Okay, same thing. Yeah, you put it from now. Since we wanna see your target, you put it from the high to the low. Ne? Meaning that with the normal one, your 100% is gonna be down here, and your 100% is gonna be down here, and then your 0% is gonna be here. But then now we can see that when we trying to target our profits, your 100% is at the top, and then your 1% is down here, whereby you get these levels here, these levels, And let's see how, if it got there, it retraced somewhere around here. It was 61.8. It was the level 61.8. I can remember, yeah. And then check our target here was hit. Let's see how many pips was given to us. Okay, from here all the way up to here, 1,033 pips. Can you see that? That's the going long example of the calculating your profits. Calculating your profits. Now let's look at the going short one. The going short one of calculating your profits on the Fibonacci tool. Okay, I believe that I'll be seeing great results in the premium service group. I believe that we'll be seeing great results. Okay, we've got it there. So you saw that if you want to calculate the retracement area, we take it from here to down here, and then we see how it plays out, ne? From here to down here. Then we see how it plays out from 100% to 0%. See how it plays out, 50 level, and then we go down with it, ne? Now let's see the target whereby we put the target where we can say this would be our first target. Okay, we take it, now we do the opposite from the low to the high, ne? From the low to the high, somewhere around here. Okay, and our Fibonacci tool shows us that price definitely has to come here, and it all get here. It all get here. So if you entered somewhere here, you can still hold, even though it will give a retracement. Let's say if you're holding a trade and you know that it's gonna retrace up until somewhere here and continue to go down, you can either choose to hold it more or go out of your profits. Go out of your profits. Yeah, and it confirms that it's gonna go all the way down up until here. Confirms, as you can see here, we've got a nice left shoulder here, a nice left shoulder. We've got a head here, we've got a head, and we've got a right shoulder here, a right shoulder. So basically, we've got a reversal pattern. On a larger time frame, this is a reversal pattern, a head and shoulders. So it shows that definitely GBP CAD has to get to this level here. It will get to this level here, 1,62125. Even if it takes a month or two, it will get to this level here. So this pair will be a sellers in the next few months. In the next few months. So we saw how the Fibonacci tool works, and we saw how to take advantage of the long side and the short side. We saw the key areas, the key percentage areas, and the levels where we need to monitor when the price gets there. We know the confirmations on how we're gonna enter the trades, and I believe with this tool here, you'll be able to capitalize more on your trades, and it'll increase your trade percentage. Thank you so much for paying attention at this lesson, as we are now entering an advanced part in our trading course. Thank you. Looking forward to meet up in the next lesson.